Right, so here we are with our third video today with Graham Lee from the Mortgage Centre here in Rotorua. And what we're going to be talking about is our banks, basically, and what they're looking for when you first go to a bank. You're looking to try to get finance to buy a house. What are the banks actually looking for? So I'll pass it on to you, Graham.
Essentially, with any loan, a banker really is looking to satisfy three things in their mind. First of all, the person. What age are these people? Do they have children? What are their occupations? Do they have clean credit reports? Is their account conduct excellent? The second thing they're looking for is, having decided that these are good people to lend to, can these people evidence to our satisfaction that they're able to service the debt? They might be terrific people with good account conduct, good account history, clean credit reports, but if a client isn't able to evidence to a lender that they can repay the loan that they're seeking, then there's a problem. And thirdly, having got the person right and having evidence they can service the debt, the next question becomes, what are we being offered to secure the lending? What type of property is it? What purchase price? Whereabouts is this property? Is it cross-lease? Is it freehold? How does the purchase price vary from, say, the rateable value or a registered valuation? Is it the sort of property that would be a satisfactory security for the bank effectively? And then the bank simply works through those exercises. They're looking to see what this person does for a living, how long have they been in their current employment, are they salary based, are they wage based, is there an overtime element or a commission element? And then they move on, having done that. What other debt does the client have? Do they have a credit card? Do they have store cards? Do they have high-cost short-term debt with companies like Now Finance or GEM, GE Finance? Then thirdly, depending on how much the deposit is, then the lender will sometimes ask for a registered valuation. If the loan-to-value ratio, which is the amount that they're borrowing as a percentage of the purchase price, if that's over 80%, the lender will normally ask for a registered valuation. If it's under 80%, then a lender will generally not request a registered valuation unless they feel that there could be an issue with the property.
Okay. Does each bank vary in the checklist or the criteria?
Yeah, absolutely. And probably the major difference in the lenders is their debt servicing models. So in a previous video I mentioned we deal with 14 lenders. Interestingly, all 14 of those lenders have 14 different debt servicing models. And just traditionally, or as we see it at the moment, debt servicing has become the key issue, and so as a broker you're aware of who has the tougher debt servicing model and who might have the more relaxed debt servicing model, and the model can vary depending on whether this loan to value ratio is under 80% or over 80%, because the banks apply a different interest rate if the loan is over 80% than if the loan is under 80% loan to value ratio. So when it's under 80%, it's fair to say that the banks would look at that application in a more relaxed fashion, and if it's an over 80% loan, in other words the client has maybe just a 10% deposit, then the bank generally will be looking a little more closely at those type of applications.
And I guess they change constantly, do they, amongst the banks? So it's a fluid type of...
Absolutely. Yeah. And what's interesting too is that Ant's exactly right. The bankers are sending us emails And over the last couple of years, it's fair to say that those debt servicing models have got tighter rather than more relaxed.
So that's another reason why someone should come and see you, so that you can tailor a package and the bank and the finance according to which bank suited that person.
Yeah, absolutely. And also banks have different lending policies, so for lending products. So ASB, for example, has a product called an Orbit home loan. And Westpac has a loan that's called a Choices Offset loan. BNZ has a type of loan called Total Money. So even the types of loans vary bank to bank.
Do you, if you go to a bank through you, it's the question that it's possibly no, but if you go to a bank, do they see you going to them better than a person, individual like myself going to the bank? If you went to them, do they give you a not a better deal, but like a more open to what you're asking?
Yeah, that's a really, really good question, and I put that to the test as recently as last week. A client had been in a position where her fixed rate was expiring very shortly. She had rung her bank to find out what rate she might obtain at expiry, and we were able to obtain in that instance a better rate than what she would have got directly herself. And part of that is because the broker group that I belong to has 1,300 other brokers in the group, and we draw down about 1.2 billion of lending every month. So there's quite a bit of power involved in obtaining those rates. And secondly, something that clients forget about in the excitement of all of this is that we're able to negotiate what's called a cashback sum. So that cashback sum, depending on the loan size, could range from $500 to $5,000, and that's a sum of money that's there to assist the clients. It's free from the bank, and it's there to assist clients with their legal fees, registered valuation, perhaps a toxicology report, or a builder's report, or a limb report. And people, in the excitement of having their loan approved, forget to ask, or they're not made aware that that little cashback sum's available. So there's all kinds of things that as a broker you're able to do, and Ant just mentioned a moment ago, structuring loans or helping the clients to decide which may be the best loan type for them given their circumstances.
Yeah, well, that's like I've learned something today. Thank you. It's yeah, so it just makes sense to me to go and see a mortgage broker. So if you're thinking about it, go and see someone like Graham, and then he'll put you on the right track. And I think it's wonderful. Won't cost you a thing, of course, and gives you some great options. So thank you, Graham, for that. And
Thanks, Ant.
And please keep watching for our next video.
Thank you.
Thank you.